Ladies and gentlemen, good day and welcome to the H1FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vanessa Fernandez. Thank you, and over to you, ma'am.
Thank you, Sagar. Good evening, everyone, and a warm welcome to the Q2FY 2025 earnings call of Aurum Proptech Ltd. Joining us on the call today, we have Mr. Ashish Deora, the founder and CEO of Aurum Ventures, Mr. Onkar Shetye, Executive Director, Aurum Proptech, Mr. Kunal Karan, CFO, Aurum Proptech, and Mr. Hiren Ladwa, EVP Investments. Today, we shall take you through our quarterly and half-yearly performance for the period ended September 2024, as well as our future outlook. Before we proceed, I would like to remind everyone that the forward-looking statements we may discuss are subject to risks and uncertainties that are detailed in our prospectus and the annual report. We encourage you to review these documents, which are available on our website, to fully understand the risks associated with any future projections or statements. We shall now start the call with Mr. Ashish Deora.
Thank you, Vanessa. Good evening, everyone. It's my pleasure to welcome you to the 14th earnings call of Aurum Proptech. I'm excited to update you on the progress we have made in Q2FY 2025, marking another significant step in our journey towards building a robust and integrated PropTech ecosystem. In our fourth year of this venture, I'm proud to share how our ecosystem has evolved. We have the right product fit, a balanced blend of professional expertise and entrepreneurial energy, and a suitable capital structure, all anchored by Aurum's commitment to profitable growth and strong unit economics. During today's call, as we review our progress for H1FY 2025, I would like to highlight 5 key achievements that we are building upon. First, in our rental vertical, we are consolidating our market dominance with each passing quarter. We now manage 32,000 rental units and are on track to exceed 50,000 rental units by FY 2026. We are also projecting that our co-living business will generate INR 500 crores, I repeat INR 500 crores in ARR by FY 2028. We are committed to allocating the necessary capital to our co-living business over the next 3 years. The proceeds from our planned rights issue and the monetization of buildings Q5 and Q6 will be utilized for this growth capital. Within the rental vertical, Nestaway is also on a growth path with its unit economics under control. We are now confident in setting bolder targets to achieve 100 crores in revenue from Nestaway. Second, regarding our distribution vertical, I'm pleased to share that we successfully undertook the realignment of our distribution business and we have now sharpened our focus on tech. Sell.Do continues to be the leading real estate CRM in India and we are actively working with the management team to explore international expansion. Our lead generation business has grown exponentially over the last 2 years and has reached an ARR of 41 crores. We have set a target of ARR of 100 crores for our lead generation business, Aurum Analytica. We believe that it is now our responsibility to scale the distribution business in a manner similar to how we have successfully scaled our rental operations. Third, moving on to our capital vertical, we are excited about our initiative to become an SM REIT. We once again applaud SEBI for this initiative, which we believe will create a very significant asset class and provide investment opportunities in real estate for retail investors. We are gearing up to launch our first asset in the next 2 to 3 quarters. Our robust tech stack developed for this segment and our in-house expertise in real estate leasing and real estate management can compound the returns in this business. Fourth, I would like to share our thoughts on our acquisition strategy. In the period of 24 months from July 2021 to June 2023, we completed 7 acquisitions. Post the acquisition of Nestaway in June 2023, we committed to deepening unit economics and ensuring Nestaway is profitable. Since both these objectives are now met, we see the opportunity to make 1 or 2 acquisitions that are highly complementary to our businesses. I need not emphasize that we will continue to adopt an extremely conservative approach to valuations, as demonstrated in our previous 7 acquisitions. Finally, as a fifth highlight, I'd like to emphasize our unwavering focus on profitable growth and unit economics. This commitment has become our mantra for our diverse businesses, allowing us to consistently exceed our revenue and profitability projections. I'm thrilled to share that our ESOP adjusted EBITDA improved from -5.9% last quarter, once again to -4.1% this quarter. Our target to achieve profitability by FY 26-27 appears well within reach. To conclude, as we progress during this year, we'll further intensify our focus on leveraging data to enhance the value Aurum Proptech delivers to its key stakeholders, including home buyers, developers, tenants, investors, and channel partners. Our commitment remains centered on deepening our integrated ecosystem, ensuring continuous improvement in unit economics, and driving profitable growth across our 3 verticals. I will now hand over the call to Onkar, wishing all our participants a prosperous Diwali and a successful year ahead. Thank you very much.
Thank you, Mr. Devra. Long-term rental demand stays robust with urban influx changing real estate consumption patterns of Gen Z and millennials. There is a demand for 2 crore rental units in co-living and family rentals across student living, young professionals, and young families in urban areas. Driven by need for enterprise efficiency and consumer experience, real estate distribution presents a 34,000 crore opportunity across data analytics, sales automation, transaction management, and customer relationship management. In capital, a series of disruptive regulations and reforms paved the way to unlock the 32 crore square feet SM retailable commercial real estate stock in India for rapid transformation and participation of institutional investors, family offices, and HNIs in India's property sector. To bring more focus on these 3 macro sectoral opportunities, we have aligned our PropTech business into 3 segments: rental, distribution, and capital. Rental business segment, offering C2C and B2C marketplace business models, demonstrated 33% revenue growth, which was majorly driven by expansion in rental offerings and improved wallet share. The co-living business added exciting new cities, Ahmedabad and Goa, increased the number of properties, and launched short stays, contributing to higher revenue growth. The family rental business added more revenue streams with Nestaway Lite and managed services, thus increasing customer base and wallet share. In the upcoming quarters, our co-living business will continue strategic supply acquisition in high demand areas across top performing cities, continuing its demand-based strategy. Nestaway, the family rental business, will launch residential resale business, leveraging its relationships in rental property owners, unlocking a large sector TAM. The distribution segment contributed largely from the enterprise tech suite offerings, contributing 29% to the revenue mix. We saw a 18% year-on-year growth in income, driven by increased account base and account penetration. Also, the addition of new locations has yielded outstanding results to the data analytics business. The realignment of sales automation business brought more focus on technology, scale, and improved profitability. In the upcoming quarters, Aurum Analytica shall launch Lucknow, and Seldu shall launch the broker app CRM and chatbots along with it. Capital business segment commenced transformation to this fractional ownership business model. We started consultation with SEBI and applied for SM REIT license in August 24. In the upcoming quarters, we intend to conclude our consultation procedure with SEBI and launch our first SM-REIT property under the new licensing framework. I will now hand over to my colleague Kunal Karan to take us through the financial performance.
Thank you, Omkar. Thank you everyone for taking out time to join us on this call today. I will take you through the consolidated results in brief. The revenue from operations for the quarter was 64 crores as compared to 64.9 crores in the previous quarter. The total income was 67.6 crores as compared to 69.1 crores in the previous quarter. The loss before tax for the quarter was INR 12.1 crores compared to 13.8 crores in the previous quarter, an improvement of 200 bps in terms of PBT to total income. The EBITDA was 21.5% in the current quarter compared to 17.4% in the previous quarter, improvement of 410 bps. Now the results as compared to the corresponding quarter previous year. The revenue from operations grew by 21.2% from 52.82 crores. The total income for the quarter grew by 18% from 57.3 crores. The loss before tax for the quarter improved by 3160 bps in terms of PBT to total income. EBITDA improved by 2650 bps. The results for 6 months ended September 30, 2024. Revenue from operations was 128.9 crores compared to 96.9 crore in the half year of the previous year, a year-on-year growth of 33%. The total income was 136.7 crores compared to INR 105.2 crores, 30% year-on-year growth. The loss before tax was 25.8 crores, that is 18.9% of the total income, as compared to 47.3 crores, that is 44.9% of the total income, improvement of 2,600 bps. The EBITDA was 19.5%, an improvement of 2050 bps year-on-year. Now in the balance sheet, the total assets of the company as on September 30, 2024 was at INR 624.6 crores and equity applicable to the equity holders was INR 284.2 crores. Total borrowings INR 65.6 crores compared to INR 193.9 crores as on March 31, 2024. The cash and cash equivalent was rupees 14 crores as compared to INR 7 crores as on March 31, 2024. The segments. During the quarter, the company has reported its segment information under new segments. Rental operation comprise of activities where the company derives revenue from customer for services offered through comprehensive technology-based solutions tailored for renters, property owners, and property managers. Distribution operations comprise of activities where company derives revenue from customers for data analytics, marketing, and sales automation offerings and licensing of the CRM products. Capital operation comprise of activities where the company derives revenue from customers for the management of investments through technology-based platforms. All the previous periods and years figures have been reclassified as per the new segments. Segment revenue for the quarter. Rental revenue contributes 65% of the total revenue from operations at INR 43.2 crores. Distribution and the capital segments were at 16.8 crores and 4 crores respectively. The segment results, rental and capital segment at a loss of 1.2 crore and 2.5 crores respectively, while the distribution segment made a profit of INR 1.3 crore during the previous quarter. I now hand over the call to Sagar to take it forward.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Raise Hand icon tab available on your toolbar or on the Q&A tab available on your screen. Kindly turn on your mic when the operator announces your name. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Vinay Gupta from Prewise Wealth. Please go ahead.
Yeah, hi. I just wanted to check what is the rationale for yesterday's transaction, which was given to the stock exchanges with respect to the Wise Techno, please?
Look, Wise Techno was created as a SPV. So the purpose of that SPV was to acquire that property in Pune for the fractional ownership business. So we just hold the equity of 1 lakh shares, and the investor actually owns the property. So the time the investors came in, we are holding the property. Now the investors have invested in that company, and now it is the benefit and reward of that property goes to the investors of Wise Techno.
Also, Vinay, this is Ashish here. This will help us to kind of the SM REIT that we have applied for, that asks you to migrate all the other fractional ownership assets. And in this case, there is now no fractional ownership asset of Pune in the company which has applied for the license.
Okay. Thank you. Can I ask one more question?
Please go ahead.
Okay. So, the second question is, previously in your previous calls, you had indicated that, the growth that the company is aspiring is upwards of 40-50%. While if we see, the first half itself, the growth has been about 30-35%. So, can you underline that, are we expecting a very strong second half of the year? Or is it because there is some slowdown in the economy due to which we have not really been able to grow to our targeted levels? Thank you.
Hi, this is Onkar here. Quickly answer your question in two parts. One is while our growth targets are at 45%, typically the sector is such that it picks up in the second half of the year, which is H2, both in the rental and the distribution side from revenue contributions as well. Second is that in Q1, we have, or in Q2, we have executed one key corporate action which brings focus on technology and scaled up technology in the distribution vertical, where we have let gone a specific services arm or a services offering of the business. If we had retained the services arm or the services offering of the business, this quarter and effectively the total income would have an additional 9 crores contribution from the services arm. Effectively, we would have grown at a 10% quarter-on-quarter growth over the last 2 quarters, from this quarter to this quarter. But what we have done is to make sure that we are able to focus on scale, we are able to improve profitability, we are able to have better cash flow management, and only retain businesses and which are core in tech and scale. We have taken this corporate action. It has while the revenue has while we have had to let go the revenue at 9 crores for the quarter, we've been able to improve our net margins in the distribution business to a 9%, to a 7%, which otherwise with the services arm would have been at a negative 9%, and effectively has contributed to a overall consolidated positive outcome.
So you're saying that we let go of revenues of about 9 crores so as to have a positive contribution margin, because this 9 crore was essentially sort of a business which was not going to give us better margins. Is my understanding correct?
Yes, your understanding is correct. Also, we realized that business was not scalable and was a business which required a lot of cash flow. Was also a business which we thought was not tech heavy, whereas we want to run businesses which are led by tech, and that is why we have let that business go, and that has reduced the revenue by 9 crores for the quarter.
Okay. Thank you so much for answering the questions.
Thank you. The next question is from the line of Vidit Shah from Spark Private Wealth Management. Please go ahead.
Hi, thanks for taking the question. My first question was just in continuation to the previous clarification you all gave. You all said that this loss-making business was let go. So could you share some details on what this business really was? And if we actually look at absolute EBIT, that has sort of remained flat at about 1.3 crores quarter on quarter. So there has not really been an improvement, right? Despite this business going. So what is the trajectory do we expect going forward?
So with it, your line was a little muffled, but I'll quickly try to interpret and give you a response to the question. With it, the nature of the business that we exited was in the transaction management area of the distribution vertical, basically facilitating aggregation of real estate channel partners and brokers and helping real estate developers achieve a velocity of real estate sale. It required aggregation of real estate brokers in every micro market to contribute to the sales volume and effectively the revenue that could come to Aurum Proptech's business. This was not scalable or was taking time to scale in micro markets which were new to the business operation, and hence we took a call to exit this. I think has it contributed to an overall consolidated net profitability at the console level? It has got balanced out with certain extra expenditure that we incurred in the rental business. The distribution segment per se, or the distribution businesses per se, at the console level have improved in terms of profitability with this corporate action of restructuring.
So my second part was really on the absolute profitability of the distribution business. Is my line still muffled or am I audible?
At distribution, we are at a 7% net margin with it.
Okay. So when I look at your segmental results, the EBIT of the distribution business is 1.3 crores, and this has really remained flat, right? Quarter on quarter, despite letting go of this loss-making business. So I'm trying to understand if there's some add-on expenditure that we are incurring in this distribution business to offset this loss-making business.
I think the complete effect of this realignment will be visible in the coming subsequent 2 quarters because this action was taken mid-quarter, and while there were some certain benefits that we could incur this quarter, the subsequent net margin benefit will occur in the subsequent.
Would you be able to quantify the benefits that we can get?
So I think we should be able to send you a detailed sort of a note on this, quantifying in the subsequent how are we going to do better in terms of the distribution.
This is Ashish here. In our investor presentation, we have tried to articulate the benefits through last few slides on this. That why it makes sense to kind of be heavy on tech. Why our revenue per team member is going up with this business. How the EBITDA margins that Onkar spoke about is going up with this. So it was something that we were looking to realign for last 2 quarters. We were working on this. We in fact articulated this as well in one of our previous calls to say that look, we want to do this, and I'm happy that we have successfully been able to do this.
Okay, understood. And I had another question on the Nestaway light business that you've launched this quarter. Could you just take us through what the TAM really is according to you, and what is the business model in terms of revenue and capital that will
Really sorry to interrupt, sir. There is a background noise which is coming when you're speaking, and because of which your voice is sounding a bit muffled. So if you're using the speakerphone, may we request you use the handset mode, please?
Vidit, are you still there?
I can. Yeah.
Yeah.
Can
So,
you hear me now?
yeah, with it, the introduction of the light model for us has been twofold. One is from an improvement of efficiency of supply, where properties which have latent, I would say, occupancy requirements. So properties which have got a 20 to 15% of occupancy still to be factored in or fulfilled. These units are being offered for short stays, which are in a way improving the unit of that particular building from an occupancy standpoint. With this, we've been able to better our overall hello world occupancy level for around 50 properties, which are now accounting around, which are now at 90% of occupancy level. So that is one. The TAM for this is really large because this competes in a way one to one with your business hotels, service apartments, which are typically looking to host business travelers, young professionals traveling to cities for projects for a short term duration of a week or a couple of weeks. So without really creating a new brand, without really creating new supply, we've been able to leverage the same supply, improve the efficiency of that supply, and also unlock one more TAM in this supply.
Okay. Understood. Thanks so much. I'll get back into some more questions.
Thank you, Vidit.
Thank you. The next question is from the line of Mayuresh M. Please go ahead.
Um, Thank you. Thank you for this opportunity. Do you hear me?
Yes, sir. Please go ahead.
Yes. So I have a question. You said that you do have some acquisitions coming in pipeline. If you find some good companies to acquire. And I also see that there is considerable debt on the company. So how do you plan to fund the acquisitions? Do you plan to take more debt, or do you plan to raise more funds through equity, through diluting the equity, or through QIBs? And to reduce the debt, what is the plan?
Thank you, Mayuresh, for your question. This is Ashish here. When we acquired Nestaway in June 2023, we had made an internal sort of commitment to ourselves that let's ensure that we are seeing profitability in every single business, in every single offerings of ours. It was also very important at that point of time to ensure that Nestaway is turned around, because Nestaway was losing 42 crores a year when we bought that in June 2023. Now, since Nestaway is profitable and we have been able to improve unit economics in every offerings, every businesses of ours, to a point where we are seeing profitability in near future, we believe that now we can again go back in making just one or two acquisitions that are extremely synergic to our businesses, complementary to our businesses. It should sit between the two of our businesses. That's the idea. To answer your question, how are we going to fund that acquisition? We have our own capital that we can call for in terms of the rights issue, which we are planning to do it in Q4. So that is one way to do it. We have our own buildings that we can monetize, so that is the other way to do that. And irrespective whatever acquisitions we look, we are always very conservative with our valuation metrics. We are very, very conservative in looking at the sort of cash that we give out for these businesses. So we will not really be spending a lot on these acquisitions as we have done in past.
Yeah, thank you. And do you plan to reduce the debt, or you plan to continue until you have more profitability and it automatically pays off?
So the only debt we carry is the lease rental discounting, that is against our properties, and they are at a very attractive interest rates. They are self-liquidating debt facilities because they are backed by the rental agreements. So that's the only debt we carry. Uh, Definitely, we will not carry any more debt than that, than the LRD possibilities. Irrespective, no acquisition can be funded by debt. We are not, I mean, we are very debt averse to do something like that.
Understood. Understood. That's it's great to hear that. I have one more question, if I may.
Yes, please, go ahead.
Yeah. So regarding the REIT license from SEBI, when do you expect to receive that license? Is there a timeline?
So my colleague Hiren is also on the call. Hiren, would you want to take this?
Yes, hi. I hope I'm audible.
Yes,
Yes.
Hiren.
This is Hiren here. Hi. So typically we are in the the next level of discussions and exchanging responses with SEBI on our application. So it's difficult to put a timeline to when the license will be approved by SEBI because it's in the hands of SEBI. But if you ask me for an estimate, another 2 to 3 weeks is what we are, keeping our fingers crossed on as the timeline for getting the license.
Okay. Okay. Thank you. And for Hello World, the co-living platform, I just wanted to understand the business, the business model. Are the properties wholly owned by Aurum, or it's also a platform where each and every property owner can lease their property through the website?
So I'll quickly give you a color of the Hello World business model in a short span. That actually doesn't do justice to the large scale that they have established. Now, Hello World is present in 17 odd cities with 210 odd properties and around 16,000 odd rental units being managed by the team. It's a complete asset-light model of operation where they do not own any buildings or real estate assets on their portfolio or on their books or in the business. They serve two types of consumers. One, student living, which is a large cohort in India. Around 40 lakh odd students are required to be serviced from a private rental accommodation standpoint across urban cities in India. And the other cohort is young professional, which is around 60 odd lakh young professionals working in 9 corporate sectors across the country in urban areas who are staying in shared rental spaces. That's on the demand side. On the supply side, you only have around 3 lakh organized rental unit supply on the co-living side. So the opportunity for or the headroom for expansion here from a demand supply mismatch point is large, purely from an operator point of view as well. And when I say operating co, it means that an institutionalized team which has got tech-enabled services. It has got institutional-grade property management servicing network that engages with aggregated supply, typically buildings with minimum 30 odd rental units to be offered for co-living, and that can be giving a community experience to these two cohorts, which is the Gen Z and the millennial cohort that we are looking at. So I hope we have tried to do justice in the short span of time for Hello World.
Yes, but these units that are built, are they owned by Aurum, or are they
We
owned by owners, and Aurum is an aggregator? It provides a platform for the students who are looking for accommodation.
So these units are not owned by Aurum. They are taken as a operating contract with the property owners or the building owners who owns them
Mhm.
effectively, and Hello World goes
Understood.
on to manage them. We have one more model of rental, which is the Nestaway model, which is more of a marketplace which services a different cohort of consumers, which is younger families who are looking to rent out individual family rental units or individual apartments for their consumption. So that's a different model where that again is a services that again is a tech-enabled service and absolutely asset light and the marketplace.
And may I know what is the margin for Hello World?
So Hello World operates at a gross margin of 50%, and so typically there 60% of the entire I would say revenue goes into the rentals that are to be paid for these properties, and then 40% comes to Hello World, out of which Hello World goes on to manage its P&L, its building management expenses, and teams that go on to service it.
So the net would be approximately 25 to 30%, right?
That's correct. Some of it, of course, goes into city fees and G&A, but we can look at an ideal state in a micro market which has got enough demand, supply, and the team and the right mix of team managing it, right balance of team managing it. We can operate at a 15% kind of a margin.
That's great. And at what growth are we growing year on year for Hello World?
So I'll give you a quick history of Hello World. We acquired this business 100% in April 2022. This was at a 38 crores of revenue. As of H1 24-25, we are looking at 135 crore revenue from Hello World business.
No, that's great. That's great. Thank you very much. That's all from my side.
Thank you.
Thank you. We'll move on to the text questions. The first text question is from Vikul Arora, and the question is, congrats on the recent announcement. Could you please elaborate on the strategic reasons behind the decision to sell Wise Techno Private Limited to Aurum Facility Management Private Limited, which is a part of the promoter group?
Look, Wise Techno is actually, if you try to understand the model of the business, is that it is a property which has been rented, which has been taken on rent by a third party. So, and whatever rental comes in, the consideration of the rent goes to the investors and the lenders of that of Wise Techno. So, Aurum Proptech do not derive any kind of benefit from the holdings of Wise Techno. And since it is the property is on rent, so definitely it needs somebody to manage, to collect the rent, to keep keep the property on its health. So which Aurum Proptech doesn't do. So that is why Aurum Facility Management, who are actually experts in these areas, so they have been given that facilities, they have been given that work to do. That is why the reason to sell it. So right now we have not sold it, we have just entered into an agreement to sell it, but definitely we do not want to manage the property, collect the rent and give it back to the lenders in that way. So that is why it has been transferred to a company which actually does that kind of activities.
Thank you. And the second follow-up question is also from the line of Vikul Arora. And the question is, can you share cash and cash equivalents at the end of the quarter, and when is the company planning to initiate the second tranche of the rights issue?
So the cash and cash equivalent as given in the cash flow statement is around 14 crores. So over and above that 14 crore, we have got around another 7 to 8 crore as fixed deposit, which doesn't form cash equivalent as per the definition of cash. But if you really try to see the total cash, it is around 25 crores. 14 crores, which is coming in the cash flow as a closing balance, plus 7 crores as cash equivalent, which comes in the balance sheet, which is in form of fixed deposits with bank with a maturity of more than 3 months.
And so as far as rights issue is concerned, we have planned it in Q4. This is what we communicated in Q1 of earlier this financial year, and we'll carry on with that same plan to kind of call for the rights issue in the Q4.
Thank you.
Thank you.
The next question is from the line of Sriram R. And the question is, which vertical is creating lease liabilities ROU asset on your balance sheet? Is it Hello World or Nestaway?
So both Hello World and Nestaway comes in the rental segments, and ROU asset is only at Hello World, not in Nestaway. That is why if you see the asset liabilities of rental, both of them are heavy because of the ROU asset and liability sitting on both sides of the balance sheet.
Thank you. The next question is from Vinay Gupta. And the question is, so on what basis has the consideration payable for transfer of Wise Techno shares has been decided? Did Aurum receive any money from providing the service of facility management earlier?
So look, the capital is the investment of Aurum in Wise Techno is 1 lakh of rupees. So right now, the question. And the valuation that has been done is based on the book value of Wise Techno, and the book value of Wise Techno is actually looks high. That is why the consideration is looking high, because the building has been accounted as per Ind AS 116, which creates the RU asset in that company. Otherwise, the investment in the company is only 1 lakh.
Thank you. The next question is from Sabarishan CK. And the first question is, can you share segment-wise P&L?
So we'll give you a quick contribution of each segment to the revenue. We have a total income of 137 crores for H125. 80 crores or 58% of that has come from the rental business between Nestaway and Hello World, which has grown at a 33% YOY. Another 29% or 40 crores has come from the distribution business, which is a combination of analytics, sales and marketing automation, which has grown 18% YOY. And the balance of 30% has come from the capital and other income contribution.
Thank you. Next question is from Rahul Jain. And the question is, hi, can you share the adjusted guidance for FY25?
So, Rahul, we would still want to keep our North Star of the YOY 45% growth metric. While there is an organic build forward in the existing businesses, there could also be opportunities that could take us to a strategic 45% growth trajectory.
Thank you. The next question is from the line of Vikram Munjal. And the question is, how fast can Nestaway be expected to grow? As tech businesses, why not accelerated 3 digits growth?
That's I think we like this question because people have started recognizing the potential of its growth at scale. Typically, see marketplace models work best when they have the right amount of supply, demand, and fulfillment partners coming onto the platform and contributing to this accelerated growth journey. Because we saw this potential in the Nestaway marketplace model, we invested in June 23. It's been roughly a year post the investment or the acquisition rather, 100% acquisition. The first half of the last 1 year has gone in stabilizing the business, ensuring that we are able to have control on unit economics, and demonstrating that the business can hit break-even, even though it's a high-growth tech and marketplace business. And this we achieved in December last year, December 24, where Nestaway hit at the unit level a break-even. And post that, we started factoring in the growth opportunities in Nestaway. The growth opportunities there are twofold. One is by introducing more revenue stream, which is effectively increasing the wallet share per consumer. So introductions like Nestaway Lite have gone on to increase the wallet share of consumers. Second is, of course, supply acquisition, where we have gone on to continuously be on a continuum of supply acquisition quarter on quarter. The third is, and which was the most crucial in this brand of Nestaway, which has got some 450 crores of invested capital by the previous teams and the previous investors, was correction in the customer experience and the consumer perception of the brand. We have now brought back the brand to a 4.1 averaged out rating on most consumer rating portals, which demonstrates confidence in the brand and confidence in the promise that the brand holds. We would like to have this controlled growth on unit economic driven supply acquisition, and also your increased customer base and wallet share for the next 2 quarters, before then fully accelerating the growth pedestal, where we would also like to, at some point, expect a 3-digit growth in the Nestaway business.
Thank you. The next question is from the line of Shift P, and the question is, could you elaborate on how Aurum Proptech Ltd's strategic focus on integrated advanced analytics with your platforms, and how is it expected to create value for Aurum Proptech's financials, and when?
So there's a quite complex structure of data strategy, but I'll try to simplify it for you. Essentially, we are focusing on 2 things. One, any consumer that comes at any native touch point across the ecosystem, be it a student or a young professional or a family rental or a purchaser or an investor, has to be given a unique consumer profile and an ID that sits across in a data lake across the ecosystem. Second, any asset, which means real estate asset, be it a co-living property or a family rental property or a buy-sell property or an investment property that comes on to any native touch point of the business, sits again in the consolidated data lake. And then there are upstream and downstream angles to pushing this data. The upstream angle to push this data is to push opportunities for every business to monetize the consumer and asset across its business model. And the downstream strategy is to make sure that our teams are equipped with the right data sets to go and engage with consumers, to go and fulfill the requirements of consumers with better efficiency. So, and it's an experience and efficiency driven business model for data, for the data analytics stream.
Thank you. The next question is from Rahul Jain from Daulat Capital, and the question is, what is the need for investment in Nestaway, both from growth perspective and also new initiatives such as resale market?
So first and foremost, let me outline the investment that has already gone into Nestaway. We have invested around 90 odd crores to buy the Nestaway marketplace and the brand. And the model is quite unique, is because here most of the renters pay their rents upfront, and then of course the supply has to be paid at the end of the month. So that helps us in good working capital cycle management. In addition to the 90 crores of investment into the brand and the platform, we have invested around 20 crores in tranches over the last 1 year that have gone in stabilizing the business and that have gone in making sure that we are able to introduce these new verticals or the revenue streams that we spoke about. An additional 30 crore has already been outlined to take the business to a certain scale. But one investor asked about, or one speaker just asked about a 3-digit growth. We feel that once we have an ideal state of marketplace, there could be a larger investment that can be outlined for this business with a larger growth strategy.
Rahul, also to add to what Onkar just said, we are very excited with the resale market because as you know, Rahul, that there are not too many companies who have been able to successfully do this. And with Nestaway, the kind of data that we have as a marketplace, it's that much easier for us to operate in this space. It's a very attractive place to be. It's going to be a C2C segment, and we are pretty hopeful and working very, very closely on this opportunity to take the resale market like we have taken the co-living market.
Thank you. The next question is from the line of Pranav Mashruwala, and the question is, can you please share details of Nestaway Lite?
Sure. Pranav, quickly, Nestaway Lite offers short stays. It offers short stays for travelers who are looking to stay in certain micro markets for the duration of a month or so, and then quickly travel out of the city. It again is similar to the Hello World model of offering of short stays, which unlocks the same supply with a sort of a better efficiency of occupancy.
Thank you. The next question is from the line of Vikram Munjal, and the question is, are there any plans to get any big strategic investor partner in Nestaway to scale business?
So, Vikram, we think that these are early days to bring any big strategic investor or partner in either Nestaway or in Hello World or in any of our current businesses. The businesses are growing at an very, very good sort of scale currently. And we have the capital to kind of grow these businesses. We have grown them over last 2 years, including Nestaway, including Hello World, including Analytica. Most of these businesses have grown multiple times with very little capital that has been put in by us. We believe that as a real estate company, we understand the problems of the real estate, and that is what we try to bring to the PropTech and the PropTech management to kind of solve that problem. So with little capital, we are able to scale up. With little growth capital, we are able to grow all the businesses, and we believe that there's still time to get a big strategic investor in Nestaway or any other business.
Thank you. As there are no further questions from the participants, I now hand the conference over to Ms. Vanessa Fernandez for closing comments. Over to you, ma'am.
Thank you, Sagar. Thank you everyone for taking the time out to join us on this call. We wholeheartedly appreciate your continued interest in Aurum Proptech, and we look forward to having you all in the next call again. Have a good evening ahead.
Thank you. Ladies and gentlemen, on behalf of Aurum Proptech, that concludes this conference. Thank you all for joining us. You may now exit the meeting.